Right, okay. Episode number 3. No, 4. It's number 4. Um, there is a Hoover on in my house, so if you can hear that, then I am actually really sorry, but this is like the perfect time to record for me. It's actually just gone off, so hopefully it stays off. Let me just move my chess book real quick. The Soviet chess primer. I'm just getting back into chess actually. With white, I play the London, and black, I play King's Indian setup, so for everyone that cared, I know a lot of people were dying to know that. Anyway, back to the topic of this video is inducement versus BOS. Now, if I had a pound for every time I got asked this question, holy fuck, I'd be a millionaire. There's three questions that people ask me so many times. It's this one, how do you determine inducement versus BOS? There's also, how do you define your structure? And then the last one is, will you ever start a mentorship? So yeah, I'm going to be covering obviously the first question today. Um, Third question, maybe. Nah, maybe. I'm joking, but maybe, just maybe. Anyway, let's actually get into the point of this video. It's going to be for the 50,000 time, don't make sense, for the 50,000th time, inducement versus BOS. Now, the key to understanding this comes back to range and control. This is the core to my training. This is the fundamental concept that one must understand to really take their training to the next level, in my opinion. Or another way to say that is, you must understand this to understand the way I trade. Range and control. Everything, everything comes back to range and control. Structure, market direction, defining structure, which allows you to then find your zones, your POIs, and inducement versus BOS, all to do with range and control. Okay, there is another way to explain this, but I'm going to explain it in the most simple form. Okay, so going back to range and control, let's say blue is range, and that will be H4. Okay, and then H1 will be control, and that'll be in like, change it to red or something. Red. What am I doing? Okay, let's say we've had our break of structure. Perfect. Okay, now, first of all, inducement versus BOS on reversals, I kind of touched on that the last episode, which is the most simple way is wait for a QM. And I'll explain why. I'm going to explain it through a continuation format, but it's the same context for reversals, okay? And obviously, this setup is a QM, so you want to be entering off a QM anyway, but I'll explain why this is not likely to be a BOS through the continuation explanation. It's the same reason, but to not get trapped in this, like, continuations are going to be harder to trade. A QM is so simple to trade because you're just entering below the liquidity. And also when I say liquidity is feeding into my structure point is here, liquidity is feeding into this zone, structure, whatever. Okay, so this is how I determine inducement versus BOS. Okay, let's say we had our H1 BOS and now we're trending to the upside. Okay, and our range drawn liquidity is here. Okay, well, what if, for example, we had this happen? That is the $1,000,000 question that people ask, or people want to know. How do you know if this is a BOS or inducement? Okay, so there's one question that you need to ask yourself, and it's so simple. The explanation is so simple, and I really wish I had a better way to explain this, or a more in-depth way to explain this, because when I'm going to tell you this, it's so simple that I don't feel like I've actually explained it. But the question is that you need to ask yourself: has range met its drawn liquidity? Simple. Here, okay, from a control and range standpoint, okay, when control breaks to the upside, this means range can now expand to here. Okay, so our drawn liquidity is a range high. Control break to the upside, range high. Here, did we meet our range drawn liquidity? No. So why does it make sense for this to be a breaking structure? It doesn't. Our drawing liquidity is still here, so we're going to be still buying to this level. So therefore, it's not likely to be a breaking structure. It's likely to be inducement because we haven't met our drawing liquidity. So the question is, have we met our drawing liquidity? Has range made a higher high yet? That's how you determine whether it's a BOS or inducement. There is other way to determine it, but we're going to go over this one in this video because it's the most simple and easiest way to see it on your charts and understand it. Everyone can understand this one. Yeah, before I say anything else, before any, of these lit guys, come and attack me for using the word inducement, first of all, shut up, no one cares. Lit gang, they always, like, whenever someone says the word inducement, they take it really personally, and I don't know, but for me, the way I see inducement is, like, to induce someone, you make someone do something, right? So the way I use inducement, the way I use the term is, here, it's, but by the way, inducement has to be relative to structure points. Like, if there was some internal liquidity here, this is not inducement, it's just internal range liquidity. Inducement is always to do with structure points, because now they are inducing people, they're making people think, okay, there's a bearish market now, let's sell, and people are getting trapped and induced through this false breaking structure. That's how I use it. So yeah, before any of the lit traders come and attack me, just piss off. So yeah, that's how I'm going to use it before I upset anyone. Now, forgot what I was talking about. Great. Yeah, I'm just going to restart. So it all comes down to this question here, and obviously we hadn't met our drawing liquidity, so it's more likely to be an inducement rather than BOS, simply because of this question. Now, yeah, I don't really know what else to say, which kind of annoys me because I want to explain it really well, I want to explain it deeply, but it is as simple as that. Nothing in trading has to be really complex and really detailed. I mean, trading is hard. It's not easy. It's hard, but it can be simple. This is a really simple way, and over the years, the past 3 years almost, I've been refining the way I see the market. I've just noticed that's not correct. I've been refining my whole plan over the past 3 years to really water it down and make it super simple, because a lot of people try and focus on these really just the most random shit that doesn't make sense, like standard deviations. They're just, in my opinion, not necessary. Seasonal tendencies, no. COT data, no. Open interest, no. Bonds, no. None of these things are needed in order to trade. You need to, I'm not saying they're completely useless, like they have their uses, but they're not needed to trade with precision and high win rate when it comes to trading the euro dollar, for example. All you need is the fundamentals: structure, timeframes, liquidity, and your zones or POIs. So yeah, keep it really simple, and hopefully this explanation is super simple. It's just this question. Ask yourself, have we made a range higher high yet? No. So it's more likely to be BOS. Sorry. No. It's more likely to be inducement. Yeah. God. Don't want to be saying that. Okay, and now the final thing I'll touch on is, again, this super short and simple video, because it is so simple. A lot of people make this so complicated. It's really not. Anyway, what about when we've made a high now? How do you determine inducement versus BOS? Well, this is where the other factor comes into play that I'm not going to talk about today. But I will say, to avoid the trap of falling for the false breaking structure, once we made a high, if range makes a high, now we've got control. How do you determine this BOS? It's a lot harder now because we haven't met our drawing liquidity. So what I would say is wait for a QM to trade the pullback. And a much safer way to avoid this completely is wait for range to pull back and then look for trades. Don't look for pullback trades. Don't look for continuations. Obviously you can, but you're just complicating things. You're just making it a bit harder for yourself if you don't fully understand structure, liquidity, PD arrays, POIs, blah blah blah, all these things. Yeah, if you don't have a really good understanding of that, just focus on the reversal here. Once range is made a higher low, But yeah, for those that are wondering, just trade a QM for now. Once you made high high to make it higher probability. But yeah, genuinely that simple. How long is this video then? 10 minutes. Wow. I will find an example actually to like make sure you really understand it. But it all comes down to this question: has range met strong liquidity? And here it hadn't. So yeah. And again, this is a continuation variation. We're going to go into continuations next video. But I will find an example right now. Let's go into 5. Yeah, hi. Is this right? No? What is that? I was sending that to someone. Okay, it's here. This is the example. I'm not going to explain why these are my structure points for now. Just understand that they are, and it will make more sense. Okay, so first of all, this is our range, which is M15. This is M15. M15's made a pullback, and now we expect M15 to make a higher high. Okay, and obviously M5 is at its breaking structure here, which confirms an M15 expansion. Okay, now our structure points on M5 are here, 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 and here. Okay, now look, going back to the question. Always ask yourself: has range met its drawing liquidity? Question mark. Let's look. Okay, here when we made this high high, we had not met our drawing liquidity. Yeah, everyone can see that, right? And price comes and takes out the previous high low. It's inducement. Why? Because we haven't met our drawing liquidity. And even look, this presents a false BOS, etc. It even gives you reactions here. It's trying to fuck you up. It's trying to confuse you, and yeah, it's just trying to trap you. But ask yourself the question: has range met its drawing liquidity? If not, then it's going to be more likely an inducement. Sure, sometimes it will sell off, but more times than not, if you stick with this rule, it will serve you well, very well actually. And obviously, price takes out the structure point. It's going to refer to something from the left, and yeah, it's honestly really, really simple. No need to overcomplicate things. Just focus on the fundamentals and understand that if you don't really understand this right now, it's going to take time. Like, I've been trading these things for almost 3 years. I've been trading structure since day one. Well, you know, after the retail thing that everyone goes through, you know, trend lines, blah blah blah. The first smart money concept that really like made sense to me was structure, because it gave me so much context. Now I've been refining structure for almost 3 years now, so understand that if you don't get it within 2 weeks, don't just hop to the next thing. Like, there's like people in, I'm going to use this example, people in the ICT mentorship, they talk about the most random shit I've ever seen in my entire life, and they always hop from one conversation to the other. Like, the chair I'm sitting on right now can probably trade better than half the people in that mentorship, because they're just not sticking with something for a long period of time. People want something, I don't know why, but when it comes to trading, people think it's like different, and people want things within 2 months. Like, it's the same as any other industry. It's gonna take time to really, really master it. It's gonna take years. Like, you should start making 5 to 10 year plans, and instead of like 2 week, 2 month plans. It's gonna take time. Understand that. It takes a lot of time. And this is also another. This is a bit of a going on a tangent here, but it could take, two people could start at the same time. One person, it could take them 2 years for them to be consistent. Another guy could take 5 years. Like, don't compare yourself to other people. Everyone goes through completely different lives, completely different situations. People learn things better than others. You know, it's completely different. Everyone is so unique that it makes no sense to compare to other people. Just look at the way like you were brought up compared to your friend or someone in a different country. It makes no sense to compare yourself to someone else when everyone's situation is so unique. We've all been through so many different things. We all learn things differently, and it takes a different amount of time for everyone. So yeah, it could take, like, it's taken me a long time. It could take you 5 years. It could take you 7 years. It could take 10 years. But yeah, just really stick with it. And if you're struggling with these concepts, you know, the ones I've shared, trying to understand it, stick with it. send me a message. A lot of people have done that, and we've gone over things, and I've explained it to them, and it's clicked for them. They've really understood it. A lot of people. This one guy was sending me that he's um, done a demo FTMO and passed with this really simple concept of range and control, which I'm super happy to hear about. That honestly made my day when I saw that. Just things like that are amazing. Um, and yeah, there was one guy that commented on my last YouTube videos just chatting pure shit, um, saying like just saying none of this shit works, etc. But if you once you study these concepts, the proof is in there. You don't I don't need to provide proof, but a lot of people want to see that and save that for the end of the year. But yeah, just going on a rant now. But anyway, yeah, just I can't remember what I was talking about. I go on rants and then I just don't remember what I was talking about. But yeah, stick with it. Send me a message if you need help, and yeah, it's really simple. Because throughout these 5 episodes, there will be 5 after I upload the next one. All I've really explained is range and control, being flexible with that, and then I've gone over structure, and obviously PD arrays I haven't covered, but just use order blocks as your PD array, and obviously trading kill zones. Oops, kill zones. This is all you need, ever. This is all you need. Don't need none of the fancy stuff. This is all you need. And now you understand inducement versus BOS in its simplest form. And yeah, you're honestly good to go. You don't even need none of these continuations, none of this inducement versus BOS. Wait for the range to pull back. Wait for control QM, and you're good to go. And yeah, honestly, pretty much everything. Obviously, once you've mastered these things, now you can start getting into continuations, a bit riskier entries. You can get into the adding confluences like standard deviations, blah blah blah. I don't ever use them, but once you master the fundamentals, then you add the extra shit. Don't focus on the extra shit before you haven't like. Don't focus on the extra shit before the fundamentals. You have to first master the fundamentals, which in my opinion are time frames, structure, liquidity, and POIs, zones, and all that stuff. So yeah, next episode we will be going over what's it called? Continuations. I'll share a continuation setup that is very powerful and very good. Again, you don't need that, but I will be sharing it. And yeah, hopefully this has helped. It's a really simple explanation. I feel like it's not enough, but hopefully it is. Hopefully it has helped. And yeah, all I can say really is the key thing in trading that's gonna really make you a consistent trader is like the biggest problem people have is defining structure points, I think. And once you spend a lot of time over that, like back in the day, I used to use every single what's it called, swing low and swing high in the market. So like even if it was a 3-bar pattern, I'd use that as my structure. And over time, I saw this didn't really work that often. It wasn't very consistent, and then I just refined it over time. And you train your eye to see it, a clear structure point. Over time, you'll train your eye to see it. So it requires time to work with these concepts. But like I said, send me a message if you find an example that you're not really sure about, confused you, and we'll go over it. Message me on Telegram. Link is in the description below. Link for ICT is also in the description below. And yeah, hopefully this video did help. Pretty sure that's everything that I need to cover regarding this topic. I think I was on H4. I just lost the drawing. I think I deleted it. But yeah, I will get the next video out on Thursday, and then we'll share some examples after that in terms of videos. There'll be example videos, and on Telegram right now I've been sharing a few more things that a little bit more in depth, and I haven't given you all the context in those specific breakdowns. So it's meant for you to go into your charts and try and find like I've shared examples, but I haven't shared all the context, and I haven't like I haven't given you a full breakdown. I've only shared a few things. I've only pointed out a few things in those charts, but there's more in those charts than I've pointed out. There's things that I haven't pointed out that are so relevant that you need to go and find in those examples. Um, so yeah, it will. Yeah, I'm not gonna say any more because I want the people that figure it out. I want it to be because they've put the work in and gone and back tested, and then they'll have that aha moment. But yeah, I'm gonna stop waffling because I think I made this into like a 20-minute video. Yeah, bang on 20 right now. So yeah, I'll get the next video out on